Hi there, Serial Trader here. Let's check in with the major US indices at the end of the week here. And starting off with SPX. So the Elliott wave chart here on the daily. Outlook still remains the same. We got a nice breakdown today, a gap down, and then a pretty significant follow through. And actually, we had I'll just quickly switch to a close only price chart. We had the lowest close that we've had since we started our decline there in September. So that's significant. Closing price action certainly is, arguably more meaningful. So on a closing basis, we've made new lows, and the downtrend is continuing. And a very weak end to the trading week, and that's another tendency that's quite typical. Is however you end the trading on a Friday at the close typically has some pretty good carryover into Monday's trading, whether it be bullish or bearish in tone. In this case, obviously bearish in tone. All right. So that being said, back to the bar chart here. So yeah, we've basically got either our wave 1 or A down. Again, I'm favoring that it's a 1. We have our 3-wave corrective advance for either wave 2 or wave B. And now we're working, the subdivisions of either wave C or 3 to the downside. And we have our 1 down, 2 up. Then we had another 1, 2 of 1 lesser degree. And now it appears we're coming down in, possibly a third of a third wave of possibly a larger 3, or in a less likely scenario, a C wave. But if it is an ABC, this will be an excellent buying opportunity. Now, how are we going to know? Well, a few things. So if we stall right at the equality relationship, which is the most common Fibonacci relationship, or I should say price relationship between a wave A and C, if we basically find support right there and have a convincing reversal and a lot of volume shows up and we get back above the daily T line, if all those things line up and we got all our signals, then sure, that's just an ABC down, bull market continues, and we trade bullish again. But if we maybe initially find some support here, have a weak bounce, and then continue down, and we put some pressure on the 1618, 2300 or sub 2300, if that's how it transpires, then you can be pretty confident that it's a wave 3. At this point, it's still unknown. I'm leaning towards wave 3 just because of the overall tone and what's been going on. But the only way you're going to truly know is after it happens. Does it go far enough? Does it go fast enough? Does it have the characteristics of a third wave? And at that point, the next trade would be maybe trying to go bullish for wave 4 once you can count wave 3 as complete and it finds support. But currently favoring in either scenario, whether it's a C wave or a third wave, there is still more bearish trading action to be had by the looks of it. So that being said, I'll just go on the shorter time frame, just to have a closer look at recent action. And looking at the hourly chart here of SPX and a little more detail, you can see we did a nice 5 down for 1, ABC up for 2, and then we did another impulse wave down for 1, and then a clearly corrective ABC up for another wave 2 of 1 lesser degree here. Subdivisions of the unfolding third wave. And, did a nice 786 retracement of this move down, and that also happened to be near the 618 relationship between A and C of this smaller wave 2. And now we've cleanly broken out of this parallel trend channel, and we're trending down nicely. So now, we're expecting lower prices, obviously, into next week. And, one thing I'll get off this hourly chart here. One thing I'll mention about the daily again. So I had these trend lines drawn for the MACD moving averages and also the daily RSI. And, you can interpret it that it's a bullish divergence because price made a new low while these indicators did not make new lows. But divergence doesn't mean it's going to reverse. It's just one of the things you would look for for a reversal. In this case, everything else, the candlesticks, the Elliott wave, the moving averages, just the volatility picture. Everything else is favoring continuation to the downside. So just having one of the many things you would look for, for a bottoming process, it's not enough. And you know what? Yeah, it's a divergence right now, but right now we're starting to break the trend line on the MACD moving averages to the downside. We're starting to break the trend line on the RSI to the downside, and this can easily just go down and get oversold again and stay oversold. Okay, if you look over here, we got oversold badly on this third wave down of our overall wave 1 or A initially. We had a bounce up, relieved that oversold condition on RSI, and then we came down hard for another wave, and bullish divergence there, sure, and it led to a nice relief rally, but it was just a relief rally, and then look, a little more correction sideways, and now we're coming down again, and we've already made new lows. Divergence or not doesn't mean you're not going to keep going down. And the divergence, as you keep going down, eventually there is no more divergence, and you're just oversold again. So it's not enough having a divergence. You have to have everything lined up for it to be, a useful, tool in that regard. That'd be like if I had a candlestick buy signal, say a bullish engulfing or something, but it didn't close below, above the T line, and everything else still looked bearish, and that's just not enough. You need some complementary, technical events to have some real confidence that something's changing. Whenever you're trying to go against the trend, the weight of evidence has to be overwhelming to try and call a trend change. Okay, the trend is down here. On the daily chart, the trend is down. On 4-hour chart, trend is down. Hourly, and so on and so on. Weekly chart, the trend is now changing to be down. We broke out this significant support channel we've been in since 2016, and we're coming down. It's not illustrated here, but we're coming down to a support channel from 2009, which by the way is around 2300 last I checked. So at some point the trend could change, but there's just no technical evidence or reason to believe that it has, or that it is. And until there is, why would you try and trade against that? It's a fool's game. Good way to lose money, and that's about it. Okay, now we'll head over to this Thinkorswim candlestick chart, and yeah, it's pretty simple. So actually some great signals here this week. So we had our bounce up on Monday after making a new low, which in itself was bearish. We made a new low. The October low did not hold, as many people were just so certain it would have. Came up, failed at the T-line, and we continued failing at the T-line. Now on Wednesday, we did a bearish inverted hammer, closed below the T-line. On Thursday, we did a bearish engulfing candlestick, and yes, this real body actually engulfed the real body of this bearish hammer. So bearish hammer, bearish engulfing candlestick, both times closed below the T-line, and then great follow through today, exactly what you'd want to see for confirmation. A gap down that went unfilled, and a weak day closing near the lows of the day. And, importantly, as I pointed out, a new closing low for this entire move down from our September high, okay? So there's nothing bullish about that. Certainly bearish action any way you look at it. And also this little channel, this corrective price channel that I had drawn out here. You can see we broke down below that on Monday. Came up, basically tested the underside of this channel that was support, now acting as resistance, and now breaking away from it again. So likely heading down hard here. Now if we go to the weekly chart of SPX, just want to point a few things out. Weekly chart, once again, strongly rejecting last week, that 50-week simple moving average. We're below the weekly T-line. The weekly 3 T-line is below the weekly T-line, closing well below both of those. And, we had that bearish engulfing candlestick last week. And this week confirmed it by making new lows and closing weak. So now we have a confirmed bearish weekly engulfing, and that implied that the next 3 to 5 weeks would trend in that direction. So far we have one of those weeks that's trended in that direction. So that signal is still valid, and it's still on, and it's still implying further weakness, further bearish price action. Now I won't go to the monthly yet, It hasn't changed much since last time, but currently the monthly is looking pretty bad too. We'll see how the month closes. I'll be quite happy to look at it at the end of the year there when it does close. I'll also mention we have the death cross, 50-day simple moving average. Confidently now crossing below the 200-day simple moving average. It's not just a little cross. We're really down there. It's confirmed. We got the death cross. So that's not bullish either. I mean, if you're just looking for any reason to be bullish, you could always find one, but it's not going to work out very well. You're really fighting the tape. The market is right. And if you're losing money and you're trying to go bullish and just insisting that you have to be right, you have to realize the market doesn't care what you think. It's just going to do what it's going to do. It gives pretty good signals that you can follow if you so choose, or you can ignore all these bearish signals and the bearish conditions here, and you can get destroyed if you want. It's not a very good trading strategy, but to each their own. Now we'll go to the Dow Jones Industrial Average. And let's have a look here. Dow, okay. So Dow Daily, we did the bearish hammer on Wednesday. We did a doji on Thursday, but we respected the high of the bearish hammer. And once again, both days closing below the T-line. Then a nice gap down today, good follow through. And, well below the T-line, 3 T-line. Everything's in bearish alignment. And not quite a death cross on the Dow, but it's coming pretty soon here. A little bit more decline, and we're there. And also on a closing basis, let me just bring up a line chart. On a closing basis, we've had the lowest close in the Dow today since we started our decline there. So a new closing low. That's quite bearish as well. And let's go look at the weekly on the Dow. Anything to remark on with this? Basically the same picture as SPX there. New weekly, intraday, and closing low, or intra-week and closing low for the weekly. And well below the T-line, 3 T-line. All the moving averages are in alignment, pointing down. Failing nicely at the 50-week moving average. So that's the weekly picture. Looks nice and bearish there. Okay, and we'll go to the NASDAQ composite. Okay, NASDAQ also giving some great bearish signals. So we had our bounce on the NASDAQ, and let's see here. Then we failed the T-line, did a bearish hammer on Wednesday, still closed below the T-line, did a nice bearish engulfing. That was actually the best bearish engulfing, better than the SPX's. So nice bearish engulfing on Thursday, great follow through today, a gap down, and closing near the lows of the day, well below the T-line and the 3 T-line. Very much in the death cross here on the NASDAQ composite. And looking at just let's see if we have a new closing low here. I didn't check. So on the NASDAQ, let's see, closing low. Oh, it's close. It's extremely close to the same closing low we did back in November there. And I imagine that should be remedied next week with a new closing low, but we'll see what happens. Now, from a weekly perspective here, let's have a look at the weekly candles. All right, so NASDAQ failing nicely at its 50-week simple moving average. Now that nice bearish engulfing weekly we had last week. Nice follow through this week. In fact, we actually did a inverted bearish hammer on the NASDAQ composite weekly, strongly rejecting the T-line, closing near the lows of the week, and also closing lower than last week and intra-week lower than last week. So again, bearish engulfing, bearish hammer. We're expecting further weakness as the weeks go by here. Barring any bounces, which can certainly happen. So weekly still looking ugly. Now let's have a look at the VIX. We'll go to that here shortly. So on the VIX coming back to life a little bit here after consolidating, although not as much as you'd expect. There's still some complacency being shown here stocks are breaking down, but the VIX, it's starting to trend back up, but it'd be nice to see it get back above this resistance level here around 26, and then ultimately make new highs above that almost 29 area. So VIX still technically in an uptrend after doing some consolidation here. Now I want to get to my VVIX tool. So let's do that. VVIX. All right. Now I just want to point out, I'll still do a separate lesson on this sometime on the weekend there when I get a chance. But for now, just want to point out right here. Let me get the box. So right here, okay, you had the VVIX get above its prescribed moving average, the 55, and you simultaneously had SPX, okay. So let me get the little box here. Simultaneously had SPX get below its prescribed moving average, the 65. And once you had that, you had a confirmed VVIX divergence followed by the moving average cross with VVIX and SPX, and that was a confirmed sell signal. And that actually proved to be a very nice signal because we trended down strongly from there. So even if you'd waited and didn't do any of this Elliott wave work and the channel being drawn and all that stuff to get a earlier entry up here, which is certainly a good idea to do, but say you just waited, you really want confirmation. In fact, we broke out of the channel on SPX, but even that wasn't enough confirmation for you. You really wanted to see this tool confirm. You wanted to see the VVIX break out above its average while SPX crossed below its after that divergence. If you waited for that and sold on that signal alone, you still captured a very nice move, and the thing really didn't go against you a whole lot after entering. So just a nice example of the signal. And when I do the lesson, I'll go back and look at other signals just to show that it does work pretty consistently, and not just for sell signals, but for buy signals as well. All right, so that's done there. So let's closing comments here. So just to finish things off, I definitely took some profits today. Closed a lot of my futures just because I don't want to hold them over the weekend. But I'm still holding a core position, the SPY 290 puts. And at this point, I would not be discouraged to close them prematurely. In fact, my kind of mental stop here is now the top of this bearish engulfing candlestick, which is a ways away. It's still possible we do the gap fill before continuing lower, although I kind of doubt it at this point. But that level, that mental stop level at this point is 2670.19. So at that point, I'd be closing and then observing what happened after that. Although I don't anticipate having to do that, I anticipate that we see some continuation to the downside before worrying too much about any significant bounces. And what else? Yeah, I guess we're getting closer to the end of the trading season here. Now, this has certainly been different than what you would consider seasonal market conditions. But typically, you often see a thinning of trading and, lower volume, lower volatility, and things just kind of go pretty quiet through Christmas and the holiday season there. But that's not necessarily how this year is going to go, as we've already obviously defied, your typical seasonal price action. But that's just a thought. It's nothing wrong with just going flat for a couple weeks and coming back in January, to find new opportunities or rejoin the the trend in progress. I certainly won't be too heavy as we get towards the end of the year, but still nursing this trade, this bearish trade for now, and it's been working well. It's been very profitable. All right, that should be good for now. Serial Trader signing off.